Hello everyone, hello traders. Welcome to our live coverage of the NFP. I'm joined with Val and Yohei and Mauricio. So our squadron is ready to react to the reaction. Val, it's going to be very tough to top the action that we saw yesterday, don't you think? It was almost like 1 month's worth of trading compressed in an hour.
Yeah, it was way beyond any kind of expectation. It's true that Draghi was short of what he promised for the last 2 months, but anyway, I can't still believe the euro made a 480 pips rally in a couple of hours, you know.
So for me, it you know, if you weren't there for the trade yesterday, you almost have to wait for markets to reset.
Yeah.
You know, it's kind of like it was a car crash, and you know the market's in a little bit of shock right now, and you have to let dust settle and things just develop for a while before you know what to do. That's how it feels to me.
Yeah, I would think it exactly the same. That the market is still in shock, and it has to get into payrolls still in shock. So it's going to be tough today, I believe. We are still trying to make up what happened yesterday, but I'm sharing with you my daily chart because the price is stuck currently around the 38.2% retracement of this last 2 months decline, you know, and seems a wild corrective move, of course, given that in 1 day we advanced what we lost in 4 weeks, right? But still, it's not clear if the fear can continue rallying after that. Okay, where does the euro will find its strength to gain? I don't know, but of course this is the Forex market, and this is far from logical usually.
Yeah, you know, they say that bear market rallies, Val, are sharp and dramatic, but not long-lasting. So we'll have a chance to see that theory play out in the next several days. I actually received a tweet from a guy who's a decent trader who's calling this pop that we had a wave 4, which implies there's still one more low towards 104.50. That would be something if, you know, we shook out every short and then finally get the break to the March lows. That would really be wild. Hi, Yohei. Oh, he's gone.
Yeah, Yohei is having some problems to connect with us. We are waiting also Dr. Sivaraman. He will join us in a bit. But Yohei is having some problems. Sorry about that, guys.
You know, actually, on the Dixie, we almost got to what I thought could be just a correction target that would take weeks to get there in a day. You know, I was thinking 96.5 or so. We got down to the low 97s. And 110, 110.50 in the euro, you know.
Yeah. Sorry, I had a bit of a disconnection, but yeah, I was looking that in the daily chart. We were talking about this yesterday. That it's a bit higher right now, but in the 1080 region we have the 1 and the 200 simple moving average in the daily chart. So pretty relevant price zone, because I believe that if we get up to that region, and we can run higher afterwards.
Those were the lows in the fall that held. That was a breakdown too. Plus 61.8.
This region is
okay, so
strange echo.
No, we're fine. We're fine right now. We are Dr. Sivaraman. Hello, how are you?
Hello, Mauricio.
Sorry for the delay. Yeah, so okay, and I saw. What is your expectation, Doctor, for this Nonfarm Payrolls? What is your strategy for that?
See, market is expected to make a small dip just 5 minutes before the announcement, and then an upward spike as a continuation of yesterday's upward spike is expected to happen.
Okay.
The number could be less than expected.
Do you
Hi,
expect
Doctor.
like
This is Dale. Doc, this is Dale Pinkert. I know that someone had commented that you were looking for the dollar to come off and that the euro could recover up towards 120 sometime. Did yesterday's action confirm that view that this is more than a one-day move and that it could be long-lasting to maybe correct the whole decline from 140 to 105?
Yes. See, normally what they do is when there is going to be a trend reversal in the market, they make subsequent upward spikes or downward spikes. Then you identify that they just reverse the market. So they are likely to make another upward spike today during and after non-farm payroll, and we could come across in subsequent days also, because this being the last month of the year 2015, December. So they bring in the yearly trend reversal move. You will come across
Interesting.
some continuous rise for a few days could be the type of moves in the market. So
Yeah, I've heard that there are some people in trouble. The short euro, long dollar was a very crowded trade,
yes,
and that's what brought on some liquidation in some of the other asset classes.
yeah. Initially the short covering will happen,
Right.
and so that will make undue rise in the market. The spikes. The players are very clever. They make very quick, successive, quick moves on the upside, and they don't make euro or GBP available in the market at a cheaper rate. And obviously, people have to go in for an expensive purchase and incur huge loss. So they create the market sentiment and act against that of the traders. That is the scenario you come across. Nothing to do with US or the European economy. That's what my humble opinion is.
Thank you, Doc.
Okay.
so? Valeria, what is the forecast for the non-farm payrolls?
We are expecting around 200 new jobs added in November, and the unemployment rate to remain around 5% as on previous month. And I don't see much of a forecast for wage, but what I see is that the market is not expecting much change in whatever. So actually, yeah, we're expecting the economy to add less jobs than on the previous months, but still 200 seems a decent add, right?
Yeah. Well, but any figure will be the same in terms of Federal Reserve interest rates. The decision for the Fed is already taken, so it should be less than expected, but everything will be continued the same, right?
I keep believing that the key to a rate hike is not employment, but inflation, right? And as long as they don't have an extremely shocking negative reading today, there's little that this report can do to help or weigh against a rate hike. Nevertheless, something about 240 should be pretty dollar supportive. And of course, below 190 should be pretty dollar bearish intraday.
Actually, Mauricio, when you think about it, the big move down in the dollar actually, to Val's point, gives the Fed some cover. If they were worried about the Fed rate hike driving the dollar sharply higher, it's made it more of a two-sided trade now, and it actually gives the Fed cover and not have to worry about the dollar going to parity on a quarter-point hike in December. So I think that Janet Yellen welcomed yesterday's action, and maybe it was planned.
Perhaps, Well, yesterday we read a lady that said that it was like a gift from Draghi to Yellen, that make some.
Yeah, they call each other on the. They call each other on the phone once in a while, or at least send text messages, right?
Yeah, I know. Well, Mario Draghi calls you in your version of Janet Yellen.
Janet, I imitated them yesterday. Janet is not a millennial, though. Either is Mario.
Yeah.
So they probably actually talk to each other instead of text.
Yeah. So we got Yohei here. So Yohei, can you hear us? Can you hear
Yeah,
us?
yeah. Hi guys, I can hear you.
Hi,
There
Sorry
you
for
Yohai.
the
go.
delay. Hi
Hi,
guys.
hi. How are
How
you,
you
buddy?
doing?
I
How you
Yeah.
doing? Hi.
So okay, nice. So what do you expect for that Northern Payrolls, Yohei?
Well, I think it'll be around expectations, around 190, maybe 200,000, and the focus will be more perhaps on the wages. I think a wage rate hike is priced in, more or less, and we would need a real disaster to move the Fed off course. So a weak non-farm payrolls perhaps means less tightening in 2016, and a good figure means more tightening. But for the December meeting in less than 2 weeks, it's, in my opinion, more or less a done deal. So we would need a real disaster to move us off.
Well, hey, I'd like to ask you something. I just mentioned the dollar weakening substantially. Doesn't that even give Janet Yellen more cover to hike? Because if they were concerned about the dollar getting too strong too fast, this makes it more of a two-sided market for a while.
They did mention the US dollar in the September decision as sort of one of the minor reasons not to raise rates, alongside China, of course, and financial markets. We know they care a lot about financial markets. So that, yeah, that could have an influence, but I think that they're going to hike in any case, unless really a disaster comes. That's what we've heard from Yellen, saying that delaying the liftoff has risks. So, yeah, a weaker US dollar in the last few days, mostly against majors, the euro, the pound, and the yen, perhaps gives another sort of icing on the cake, if you wish, for a hike.
Yeah.
So, Doctor, I believe you have a strategy. I'm always interested in your strategy on red events because I'm just a chicken. I'm a chicken to trade into these numbers. So you're one of the bravest guys I know, and you actually have a system for chaos. So why don't you go ahead, take it away, and tell the community what you're thinking going into the number as far as levels, etc.
Yes. See, basically, I'm interested in capturing the profit on either way moves of the market. The players create the market high and then reverse the market. So we need to find out what level we can enter and things like that. Now it is around 13:14 GMT, another 14-15 minutes to go for the announcement. During the time, they will make a small dip, a false move before that of the intentional move. So what they intend to do is, let me show my slide briefly because it's already time is up. So in the spike trade possibility, I wish to show see, the focus says that they are expected to make a swing and rise during that of the US session from 14:30 GMT. 13:30 GMT is the data release time of non-farm payroll, and it could be just slightly less than expected, around 200. So the market could make a reaction to that in December the interest rate is not going to be altered. As a result, the players are expected to make a very quick upward move. So my call for the trade is keep about 15 to 25 pips below that of the current market level, a buy limit order, and exactly by 12:30 GMT they will try to make a push to hit all the stops before making a rise. At that time, our order might get filled, and then quickly we can keep this edge order 30 pips below to limit the risk. And once the position makes profit, you have to keep stop at entry and remove the hedge order so that if they just reverse the market again, we will not be caught unexpectedly, and then a rise of about 100 pips is expected to happen in the market. 100 to 150 pips net change could be seen. Currently, euro is showing about 37 pips, and GBP is showing about 1 pip negative net change, and they are expected to make a sudden continuation of the rise. And today we could come across more rise in the case of GBP when compared to that of Euro rise, because yesterday they gained more levels in Euro and less level in the case of GBP. Today they are expected to spike up GBP more. So this is how they alternate and handle Euro GBP cross. So this is what my call is. Then I will be with you all and try to enjoy the release time and find out how exactly the market is expected to make moves. And in the meantime, if there is any input I need to give, I'll just peep in and give the information.
Interesting.
Okay.
Doctor,
Yeah.
is that based just upon your experience of having watched red events for many years? For you to know that you want to buy a dip on the NFP today? Is it something proprietary you've developed? How do you come to these conclusions going into the number that you prefer to buy a dip rather than sell a rally?
Yeah, there are two important components. One is my forecast algorithm, which says that US dollar is expected to weaken during the month of December and also during January and February. We come across continuous gaining moves in the case of Euro and GBP during that time, and USDN may not be dropping correspondingly. Instead, it will also gain the levels. So this is what my forecast says. Then I do the market reading by referring the current levels to that of the initial highs and the lows set around 3:30 GMT. That also confirms that the market is expected to make an upward spike.
Okay, interesting method.
Okay. Let us
Thanks
hope.
for
Even if
sharing.
it does not happen, then I have the trading strategy to earn money from that market.
Right. So, guys, we have a question here for everybody. Yeah. Let me read here in the chat. It's very curious what you all think what the euro-dollar pair will do on the Northern Payroll after yesterday ECB. What is your expectation for the euro-dollar today in the Northern Payroll? Well, Johaib, perhaps you.
I think the euro is quite bullish after yesterday's big Draghi disappointment. So I think that even a very small miss on the non-farm payrolls could send euro-dollar to challenge 110 once again. It's more buy. We would need a really huge positive surprise to depress euro-dollar.
But don't you think it's a little bit overbought?
I think, yeah, I mean, if you look at our size, yeah, it's overbought, but I think it did have its correction, and it was such a big disappointment, such a big event, that I think the impact will stay with us for a few more days, unless there's really huge positive surprise in NFP, or unless Draghi later says something totally different. We would need something really material to change what happened yesterday.
What's he doing in New York, Yohei, and when is he going to talk?
He's going to talk at 4:45 GMT. I don't know what. I guess it's a conference. I don't know. I wasn't invited, so I don't know. So.
I think it's interesting that he's in New York. I bet he visits the New York Fed today.
Yeah, lots of secrets down there, no?
Yeah.
Do you expect some Financial Times news before the release or whatever?
Somebody must know. Sorry, the time is 5:20 GMT. 5:20 GMT.
Okay. So, Valeria, what do you think about the euro-dollar, and what is, in your opinion, the most attractive pair for you right now?
I don't believe that the euro-dollar is the pair to trade right now. I do agree with Yohai that the movement has been way bullish for the euro, and even a small miss will favor the ongoing bullish trend in the euro-dollar. I would like to stay away from the pair for a couple of days until it settles and we have a clearer definition, unless we broke below, I don't know, 730 or so on a really surprisingly positive report, which I'm not expecting. So I rather focus today on the dollar Japanese yen. I believe that that will be a more neutral pair to trade in the in light of what Roy said, and will depend more on only unemployment figures. The Aussie can also give us some more neutral trading opportunity, only considering the case that for me the Aussie is also quite bullish, so I will prefer to trade that pair in the case of a really bad US employment report. I'm expecting the Aussie to continue rising, so I will favor if the pair if the data is it's bullish for the Aussie.
Bullish for this. Yeah. And what, Dave, what is your? Well, you know, I know that you guys in the live were waiting for this jump in the euro dollar. So could you please give us a scoop on that?
I'd go with what Yohei is saying. Just because the RSI is extremely overbought, that's actually a sign of strength. Just because something is overbought. In fact, I teach that confirmed highs imply another high on the way. And if you look at, I'm looking at Vale's charts right now, you look at that RSI reading we had near the highs yesterday, both price and RSI and Vale's momentum, it all confirmed it. So I don't think that just being extremely overbought is bearish. I think it's most likely very bullish, and momentum has to wane. So if we get new highs in the euro, which that's implying, then we'll pay attention and see what kind of RSI readings we have then. And I was thinking about it, and I knew people were going to say, what do you do with the euro? I knew we were near an inflection point for the last week or so, or I believed it. I didn't know, I believed it. You can't know every day what to do with the euro. So maybe you knew a few days ago it was right not to be short the euro and maybe be long the euro, but now if you're flat, remain so until the next setup in the market, like Val and I were talking about, is in shock. So I'm going to wait for more action for readings to begin to fade on the RSI before I would think about shorting it. And we're almost at targets that I thought would take weeks to get to in a matter of 24 hours. So sometimes the right trade is no trade, and for me right now, after yesterday, I'm waiting until next week before I make any decisions. I'm not afraid to say I don't know.
Yeah, that's a good point. So, Valeria, in your opinion, what is the in terms of number and non-farm payrolls, what will be bullish and what will be bearish for the dollar?
I do believe that, of course, anything above 200 will be dollar bullish, and 240 will be, the 240 is for me the magic number. Anything above 240 will be really bullish for the dollar, right? Or should. And anything below 200, anything below what we are expecting, given that the poor greenback is so weak at the time, will be pretty negative for the dollar. Anything below 100 or so should be poor reading and dollar bearish report.
And yeah, go ahead, Valeria. Sorry.
I was thinking of revisions of previous numbers, or an uptick in employment, or a falling wage. There's a lot to take care of. It's not just about the headline. Keep in mind that the headline is just that, and it can trigger the initial reaction, but it will be the result of everything what actually sets the trend. So that's why it's worth waiting a couple of minutes and let the market digest the full report before taking action.
Indeed.
Okay. Yeah, I see. So, okay, Doctor, I saw that you say you wrote in the chat that in your opinion the pound will go wilder than the euro today.
Yes.
Do you want to extend something on that?
See, basically what the players do is they make either euro or GBP gaining more in the market to change the market sentiment. From that other bearish feel, they just used yesterday's ECB press conference and they started gaining the levels. So that has given the sentiment to that market that US dollar could weaken. Then you would have noticed that GBP gained and they made the drop in the case of GBP when euro was holding high. That is mainly to get the maximum gain in the case of euro GBP cross. Now what they will do is, after making an upward stop in the case of euro GBP, they will make a nominal gain in the case of euro and make a very aggressive gain in the case of GBP. As a result, euro GBP will come down. So this is how they alternate the moves in the case of majors to handle the crosses. Every time it happens. And also it is confirmed that they are going to handle the crosses today more after that of the non-farm payroll by, when you look at the USD CAD and Australian dollar, both are showing negative net change. And that is the indication that they want to handle the crosses more than that of the majors. The majors will make moves, but it will be contrarian. And it may not be a clear USD weakening or USD gaining move. Instead, it will be mixed or a contrarian move. That is what I envisage. We have another 2.5 minutes to go for that.
Okay. Okay, we are 3 minutes to go. Jorge, do you want to say something to prepare market reaction in the non-farm payroll?
Just want to comment on what Valerie said about the euro. Yeah, it's what Dale said about being, the euro is now more interesting and perhaps not such a good trade. Perhaps, as in many cases, dollar yen, which is bang in the middle of a range between 122.20 to 123.60. In many cases, it has the best reaction to U.S. releases. Yet again, the first reaction, as Valerie said, could be a knee-jerk one on the headline, the algorithms moving, and then once markets weigh in all the figures, such as wages, then we could have the other move. But in any case, this could sort of better reflect a beat or a miss on the non-farm payrolls better than euro-dollar at the moment.
Okay.
One thing I could add is that we have employment data in Canada too, right? At the same time, release at the same time. So I would not even take a look at that. I guess I would just close that chart.
Since that Saudi oil minister made that comment, Canada looks disorderly to me. And I agree with you 100%, Val, right now.
Yeah. So don't even take a look at this one. Window report. Okay. Please remember that we have a little bit, but we are ready to go. Less than a minute. You will see the reaction first in your charts, and then hear from us. Okay.
Yeah, I will try to type in the number here in the chat.
There we go.
30 seconds. Less.
Tick tack, tick tack, tick tack, tick tack. How do you you can say the number in Jelen's word?
We are getting a lot of wow reactions again. Market is giving us a lot of those. Hope this is not a disappointment. Okay.
211, 211.
Okay. Yeah, so Dr. might get his spike to buy now.
Better
Good
than
number,
expected.
right?
211.
Yeah, both the OC and the dollar twins are the ones reacting the most. Unemployment rate steady at 5%.
Steady at 5, yes.
Yeah, wages plus 0.2 month over month. I'm looking for the year-over-year figure.
Yeah, as expected, but nothing really good rate so far.
Yeah, the unemployment rate in Canada rose.
Yeah,
7.1.
bad, to say the least.
Yeah, earlier.
It widened. That came along with the report, but we have no much.
Well, better than expected, you know.
Yeah. Euro dollar is a bit lower, but nothing
Nothing
extraordinary.
important.
This could be just a buy opportunity or a false move. Dollar yen is a bit more meaningful, 123.20.
Yeah.
Pound, relatively balanced. Canadian dollar, balanced. Aussie, a bit lower. Kiwi, a bit lower.
Little
Go ahead.
reaction.
Do you have any important technical levels around the 124 level in U.S. dollar yen that your charts are? And Val, do you have anything up there around the 2420 area, 24-ish?
Watching that this is the level, the 2370 region is for me a bit more relevant. If you take a look at the daily, we have plenty of highs and lows in there, and it's the level that we have been stalling in advance since
Right.
ever since this November.
Right.
Is for me the region to take.
Yeah, the bears have to make a stand there. I think we could go to 129,
That
or
much.
at least make new yearly highs, or take out last year's highs.
Gold is
Employment rate.
falling big because
Gold is down big.
yeah, not in the day, but it has erased all of its intraday gains. Gold that's not like the idea that the Fed can raise rates with this number.
You have to respect how the euro's holding up on a good number.
Yeah, market loves the euro now. Big change from 24 hours ago.
I have a 50-day coming in around Dr. Severman's entry around 107.5. So,
Yeah, they actually, because the number was in line with the expectations, so they made a small dip and they started firming up. It indicates that they do not want to drop euro and GBP. So
okay, so you
slowly
can't.
they will start gaining the level. Then those who have been waiting to do the short covering will be forced to go in for short covering for the weekend. That's what I anticipate.
So on your spike strategy, if it doesn't happen within a certain period of time or right after the number, the trades aren't valid anymore?
No, the trades are valid because
Okay.
I have the hedge order to limit the risk. And
Okay.
now my hedge order is not filled, only the buy limit is filled in the case
I
of
see.
0 and GBP, and they are expected. If the hedge and the hedging is making loss for 10 to 30 minutes, then I'll close the hedge and keep another hedge order to continue with the buy position. In the event if the hedge is not filled and the buy position is making profit, I will keep stop at entry and remove the hedge order and enjoy the profit during the US session. They are most likely to gain the levels during the US session by telling some other excuse. We'll come across them. So ultimately, market needs an excuse from time to time.
So we got, on the other hand, we got a big move in the Australian dollar and the Canadian dollar. It's the big mover right now. I am watching in your charts, Valeria.
Yeah.
Yeah, and just the Australian dollar has broken.
Yeah, the Australian dollar.
Yeah.
Canadian dollar is going in one way because we have positive readings in the US, employment
Yes,
readings,
it's in the range.
and bad ones in Canada, right? So for one time, we have a certain trend coming from the macroeconomic readings on Unemployment Friday, right? And the dollar Japanese yen and the Aussie, as we were commenting before starting this coverage, before the news release, were the ones with more chances to settle direction, and there we are.
We have a few more positive figures from the NFP. First of all, we had upwards revisions worth 35,000, especially for last month, for October. And also the participation rate ticked up from 62.4 to 62.5 without a rise in the unemployment rate. So all in all, these are a few more sort of positive figures.
Great.
Yeah.
So,
But
well, let's say that the interest rate is really is almost a fact, right? This is very certain, will be really certainly in the
They would
next
lose all kinds of
probably.
credibility if they don't go now.
Sorry?
They would lose all credibility if they don't go
Ah,
now.
of course, you know.
Yeah.
yeah, they have to.
Yeah. But it's now or never.
What?
You know, it's now or never. Now or
Oh, okay.
never.
Yeah.
That's what Elvis would say.
And it will be it will be the first time that the Federal Reserve rise interest rates in December. Ah, okay, it's always a first time.
Yeah, they announced the tapering back in December 2 years ago, so it was also a meaningful announcement. So
Yeah, that's right.
average hourly earnings are up month over month 0.2 and year over year 2.3, lower than last month 2.5, but still sort of in the high range. So it's not too shabby.
Yeah, I did a taper last December, Yohei, but my pants became too uncomfortable, so I let them out again. So I could eat more food.
So, Dale, in your words, I mean in Janet Yellen words, how do you will announce the interest rate in the next meeting?
Oh, you want my Janet Yellen imitation? Is that what you're asking for?
Kind of.
We will look to tighten and have a lift off unless the data says that we won't, and then we will a little bit later on in the year unless we decide not to. That's it.
Okay. Thank you, Janet Pinker.
The stock market likes it, getting back half its losses from yesterday.
Yeah, that's interesting. That's interesting. And the gold is back down.
Yeah.
Yeah,
Yeah,
yeah.
it's back down. Yeah. So, what is the? Yeah, go ahead.
The mining shares are pretty stubborn. It almost looks like some of my buy points on the gold shares, like it's going to take 10, 20, or 1,000 gold to drive them down to the areas I'm interested in buying them. But they've been very stubborn with gold making new lows, new lows, new lows. But I'd like to see 1030. That would be okay. It's hard for
What?
me to see 1030 gold without the euro retesting its lows, though. So I really don't know what to do today.
Well, everybody was expecting the euro dollar or the euro retracement, but it's holding. So I think the euro is showing some kind of a strengthening.
Yeah.
So
Anyone who bought the euro pound over the last few weeks may want to consider taking it off in here and looking for pullbacks. That was a pretty dramatic move. In fact, that was what I was basing the dollar turn on, was successive new lows in euro and successive new higher lows in euro pound. So might be a good time. You never go broke taking profits, right, guys?
yeah.
I remember you said yesterday that you saw higher lows on euro pound, and that was for you an indicator for a move in euro dollar, right?
Correct. Yes.
Yeah.
And that's been going on for a few weeks. Actually, so now the weekly on the euro pound starting to look like the right shoulder is developing.
Euro dollar a bit lower, but not
Yeah.
extreme. Move
Nothing
is stronger in the pound. Sorry?
Nothing really relevant. I mean, nothing going on in the euro dollar pretty much.
Aussie dollar fell exactly to support line. I have a support at 72.80. It bounced back from there. So that's a nice move.
So, Valeria, what is the levels to see in the Australian dollar? That I know just you were talking yesterday about the Australian dollar.
I do believe that the Aussie is still strong. I won't be one vote seller at these levels. Right? I believe that ever since bottoming around 69, we are going higher in here. We need to break above 73.80, as we were discussing these days in the previous coverages, to confirm a more sustainable rally long term, right? And at this point, I do believe that we can go down to 72.40, which is a huge static support level for me. And I will consider buying at that level rather than getting short.
They also revised up the September numbers, which was that weak jobs number.
Yeah, we have employment data in Australia next week.
Yeah.
And past month, revolution.
Yeah, and look the changing of side. Look, the cable is testing lows right now. Yeah.
They are trying to come closer to the day low, try to take out the stops if there are plenty, and then start gaining the level. See, normally what they do is, before making a rise, they will try to induce the long holders to become jittery and liquidate the long position with a lesser profit. Then later on, they gain the levels in the market. That's what they are trying to do. It in first 15 minutes, they are just inducing the long holders to put profit out of fear. Then the next 15 minutes, they will gain the levels to induce short covering. And afterwards, during the US session, they will slowly gain the levels, and then they will say that is a long-term trend. So that is what we expected. And also, if you see that the downward move is taking a very less time frame when compared to the upward move. So they are accumulating here the buy positions.
Okay.
In that October has been reviewed to the upside.
October.
Yeah, 298 against previous 271. Really huge number, and still the dollar refuses to rally against the euro. And
Yeah, the total revision is 35,000. It's okay. It's a nice addition.
So, Johei, what was the mode of the market, of the your audience today in your show? What were they thinking about the last movement in the euro dollar? You know, the market after the ECB. What was the mode in the market, the sentiment?
I think there were many people shocked by the strength of the move. I think it's the biggest rally since 2009 or something like that. And the big question was, is it going to be reversed like we talked before, because it's overbought, or is it here to last? And we still have big events. I mean, we had the non-farm payrolls now, and we still have a speech from Draghi later on. So that was the mood as well. And I had questions about other euro pairs, such as euro against the Aussie or euro against the pound. So apparently, many in markets not watching the euro or watching Draghi, but not necessarily trading euro against the dollar, but in many cases against other currencies. And they were looking to reposition. And I must say, I didn't hear questions about people very eager to return immediately after the event, but more of a wait-and-see approach, which I think is healthier.
Yeah, I agree with you. Well, we have a question in the chat. I think it's I will send you to you, Valeria. It's about the dollar Japanese yen. There is, well, I will send you to you because the person who is asking is the name is Val too, so it's like you. So we are expecting the dollar Japanese yen to be around 124. What do you think about that?
Today, not today. Honestly, I'm seeing a really quiet reaction to the market. Investors, quiet reaction, sorry, to the news. Investors are being quite reluctant to rebuy the greenback after what happened yesterday. So honestly, I do expect the pair to continue trading in the range that Yohai mentioned earlier today, 22.20, and the top around 23.70, right? Until the Fed meeting, not next week, but the next one, and that will be what decides whether if we go to 25 or 21. But I don't see this range giving up today.
I see. Do you have something to add, Yohei, in the dollar Japanese yen?
No, I guess. As
Yeah.
for yen, I can just say that in the wider context, this is enough for a rate hike, more than enough. And the question, I think, the markets will begin focusing on 2016. How many basis points will the Fed raise rates in 2016, or will it turn into a trichet, as Dale said yesterday, a hike or two before the Fed needs to reverse course? And that's an open question for me.
Yeah, yesterday you say that the Fed usually hike rates by a quarter of percent. So there is some speculation that say that the Fed will rise 3 times in the next year. So it should be like 0.75% for the finish of the next year, right? Is your take on that?
I think that if everything goes well, the Fed will hike every second meeting. Every meeting that they have a press conference, that means 4 times. That means an additional 100 basis points. But they're data dependent, and if stock markets crash, if we have trouble in other places in the world or in the U.S. economy because of this hike, as Dale mentioned, the car sales, for example, then perhaps they'll do less. So I think 100 is the maximum for next year, and also 50 is possible.
Okay. Thank you, Yohei. So Dale, yeah, I know that you should go to the live, to your show, to the live analysis room.
Oh
So
yes, I need time to do a wardrobe change, Mauricio. So I'll need 10 minutes to put my makeup on. But you know, before I go, I'd like to. I find it interesting that Yohei brings up March 2009, which was the low in equities after the financial crisis, and most of the gains in equities came with a weaker dollar. Dollar dropped 30%, while the market rallied 30%, mainly nominal gains. I find it interesting that we had a similar day yesterday. So, you know, a lot of people are going to call every rally in Euro to be a shorting opportunity. And now that I think about what happened in 2009, this might be the central bank's next game to help emerging markets is for the dollar to weaken. And so, interesting analog, Yohei, and I'd like to wrap it with, I feel fortunate to have been able to work with you guys twice in a week. It's been, you know, collaboration with you guys is something that is fun for me. I enjoy it, and always look forward to working with the best team on the net. So have a great weekend, my friends. Mauricio, Dr. Sabiraman, Yohei.
Thank you.
Valeria, have a nice weekend, and I'll see you guys. I'll see you guys soon for the next live event.
Yeah. Konbanwa.
Yes.
All right. So
Okay.
I have to go to makeup and hair right now. So I invite everyone to join me in Lara in about 10 minutes. My guest today is Brian DeQueep at FX Active, and Don't isolate, collaborate. I enjoyed collaborating with you guys today.
Yeah, thank you. Brian is a smart guy. I made a hangout call with him, and he's a smart guy. And
Okay, good.
I am very sure that it will be a really nice interview.
All right, guys. Thank you very much for having me, and I'll see everyone later.
Okay.
Yeah.
Bye.
Thank you.
Okay.
Bye.
Thank you. Then.
Adios.
Thank you. Bye.
Bye. So, Dr. Sivaraman, I just want to ask you about your conclusions on your strategy and what's going on from now.
Yeah. See, the first 15 minutes after the announcement of non-farm payroll, they made the dip, just to give that impression that Euro and GBP could come down. And after this, from 1345 onwards, they started gaining the levels. Slowly, they are gaining the levels and coming to that of the psychological number 1.09 in the case of Euro and 1.51 in the case of GBP. This is how they just make small swings, and people think that they are all nothing but momentum. But what is happening in the market is they make a small dip, induce the long holders to liquidate the long position, they absorb it and gain, and then afterwards, some people going for a small scalping of sell and buy, they induce them to do the sell and make a small dip so that those people can book about 10-15 pips profit, and then they'll gain again. So the scalpers will come into more position. Then suddenly they will gain the levels from 1430 GMT, and then the scalpers will also get trapped. So they want to have as much of short sellers in the market, and then they will all come for short covering during the weekend. Then they will make a quick upward move around 15:30, 16 GMT. Then everybody will be caught unaware. The long holders would have just liquidated the long positions out of fear that the market might reverse again. So when the profit is seen, it is better to book. That is what they book it. Later on, only the players will be holding the long positions. Rest of the traders, predominant of the traders, will be holding short positions. So they will be compelled to do the short covering for the weekend because they are afraid of the weekend scenario. Suddenly something could happen the next week. So they do not want to hold the last making position. They come for the short covering. This is what every time we come across as a scenario in the market. It is a question of the human psychology reacting and which is determining the levels in the market. And the players do it so nicely, and it appears that it is out of the collective move decisions of the human. But they are the one, they can make such moves in the market. As I told you, first 15 minutes dip, then later on gain. We cannot do that. They can only do it. But since I have been observing their moves like this for a long time, I know this is what they are going to do it. So without any fear, I am able to trade, provided the basic understanding of the players, the intention is understood. That is what I feel. So basically here, now it is 13:54 GMT. Another 6 minutes, they will try to slowly gain the level. They will not breach the high set for today now. But by 15 GMT, they will breach the high set for the day, quickly make 30 pips gain, and trap the short sellers, because many people might think that euro does not have a strength, it is in overbought conditions, etc., and then they will try to sell on rally, and they will induce them to sell and then trap. So that is why I always say that the trend is not always our friend. At times the trend is our friend, but predominant of the time the players create the trend and act against it of the traders pending positions, open positions.
Yeah, that's really true. Thank you, Dr. Shivaraman. Thank you for coming today and for your opinion and comments. As always, it has been a pleasure to be with you. Thank you.
See you. Bye.
See you. Bye-bye.
See you.
Okay, so Valeria and Johay, what we can say now? Who wants to be the first?
Ladies
Valeria?
first.
Ladies
Okay.
first.
I know
Okay.
some of you was going to say that. Anyway, I do believe that there's not much to say. Before we start coverage, or at the beginning of it, Beryl said, I said that I do believe that employment is not actually relevant. What's really relevant in the U.S. is inflation, and we had a good sample of that today, right? Because the market hardly reacted to a good employment report. We have been having good employment reports for most of the year, with a couple of exceptions. So the question of whether the Fed can or cannot raise rates in December, we'll have to wait until the actual meeting in a couple of weeks, right? December 15, 16. And in the meantime, the employment report was good enough to support economic growth, but not stunning enough to confirm that the U.S. is skyrocketing, the U.S. economic recovery is skyrocketing. And adding to all of that, we have yesterday's sell-off in the greenback due to Draghi's soft extension of quantitative easing. So overall, I believe the dollar will remain subdued, okay, and this bearish tone will probably extend into next week. I could expect the mayors to trade in range for the most, and I hope Shilleng will give us an answer next December 16, okay? I hope,
Okay.
and that's it.
Everybody hopes that.
Yeah.
Okay, you had your turn. Okay, sorry, Valeria. Thank you very much for coming today. It has been a
My
pleasure.
pleasure, no problem.
And see
My
you
pleasure
next
as well.
time. Yeah, I know.
So let's see.
Let's see next time.
Yeah.
Yeah, I know. Well, your show is next week, and we will do some tests for new coverage in the next week. You know that? You don't know that? You didn't know that, but I am telling you right now. Okay, Val. Thank you very much, and see you later.
Thank you, guys. See you
See
soon.
you. Have a great weekend.
Okay.
You too,
So,
Yohai.
hey, you and me. So, what is the best pair to trade right now?
Well, maybe dollar yen really had the best reaction, moving higher, but now alongside other pairs, it's falling back down. All in all, it's a solid report, but more or less it's priced in. The Fed rate hike in December is priced in. It's entering into this report. The Fed was not that data dependent, but we had no catastrophe, so everything continues as usual. Just a quick roundup of the numbers: 211,000 NFP, better than expected. Wages as expected, 2.3 year over year. Positive revisions, but not sort of very surprising, 35,000. And that's more or less the important figures. So euro, I still see it as bid. Only Draghi maybe can hit the euro, moving towards the end of the day. Other currencies, I see dollar erasing its small gains. I don't believe we'll have a collapse in the dollar, but also nothing that exciting. Only currency that stands out for me is the Canadian dollar, because we had a poor report in Canada alongside a better NFP, and OPEC is not making a real decision. So we can see also the price of oil falling, getting closer to 40. So the interesting pair for the day would be the Canadian dollar, dollar CAD, because of OPEC and because of everything we had there. Will we see it break higher? Maybe not. And technically, Aussie dollar had a very nice technical behavior. 72.80s worked perfectly well as support. The top of the range is 73.60. Moving into next week, I think markets will try to rearrange themselves. It's a sandwich week between Draghi and Yellen. And as Valeria said, I also hope that Yellen will rock the market ahead of Christmas, provide us with this kind of early Christmas party. And yeah, I guess that's it.
But there is a possibility of 80% right now, according to
but it's 80% for a rate hike to 50 basis points, and because we have a range currently between 0 and 0.25, and next we'll have range between probably, as many think, between 0.25 to 0.50. The effective rate is 37, will be 37 points, and so this 80% for 50 basis points actually means 100% according to bond markets for a rate hike. I learned that from Adam Button at Forex Live, this tidbit, so thank you. And yeah, we'll need a really huge disaster, but with a strong NFPA and Yellen saying that delaying the liftoff will have risks, I think we'll have the historic rate hike in 2 weeks.
Yeah, it's now or never. Now or never. Yeah. Okay, Yohei, thank you very much for coming today. It has been a pleasure, as always. And see you next week in your show.
Monday morning.
Yeah, Monday morning. Okay, thank you very much, and see you next week.
Okay. Bye-bye. Thank you.
Bye-bye. Okay, guys, so right now, you just need to refresh your page. Why? Because Dale Pinker is coming now. Dale Pinker is coming to town. The town is a live video TV channel. Just F5, reload, refresh your page, and you will continue watching F Street live video section. It has been a pleasure. It has been a wild week in this wild Forex market. But we are here, and we will be here, and be sure that you will be here with us. Thank you very much. Enjoy your weekend. Take peace, be peace, and good. Go well. Bye-bye.